Hi, I am Anna. I come from www.ntvforex.com. USD CAD continues to fall toward 1.3200, trades at fresh multi-month low. ntvforex.com news ID 047DAB 5 minutes ago by Aaron Sengezer. USD CAD falls for the fourth straight day on Thursday. US dollar index stays in the negative territory a little above 93.00. WTI stays quiet above $42.50 following Wednesday's upsurge. After closing the first 3 days of the week in the negative territory, the USD CAD continued to push lower on Thursday and slumped to its weakest level since mid-February at 1.3209. As of writing, the pair was down 0.22% on a daily basis at 1.3215. Oil rally supports CAD. The broad-based USD strength and rising crude oil prices weighed on USD CAD during the first half of the week. Despite the OPEC's dismal global energy demand outlook, falling crude oil inventories in the U.S. helped the barrel of West Texas Intermediate WTI preserve its bullish momentum. The WTI gained more than 2% on the day and was last seen consolidating its weekly gains near $42.60. On the other hand, the US dollar index SDXY upward correction came to an end before it reached 94.00 and made it difficult for USD CAD to stage a recovery. Ahead of the weekly initial jobless claims data, the DXY is down 0.33% on the day at 93.11. A modest decline witnessed in the U.S. Treasury bond yields on Thursday seems to be putting additional weight on the USD's shoulders. NBSP on Friday. Manufacturing sales will be featured in the Canadian economic docket. Moreover, retail sales, industrial production and the University of Michigan's Consumer Sentiment Survey from the U.S. will be looked upon for fresh catalysts. NBSP technical levels to watch for USD CAD overview today. Last price 1.322 today, daily change 0.0026 today, daily change percent 0.20 today, daily open 1.3246 NBSP trends daily SMA 20 1.3393 daily SMA 50 1.3493 daily SMA 100 1.374 daily SMA 200 1.3532 NBSP levels. Previous daily high 1.3347, previous daily low 1.3229, previous weekly high 1.3451, previous weekly low 1.3234, previous monthly high 1.3646, previous monthly low 1.3331, daily Fibonacci 38.2%, 1.3274 daily Fibonacci 61.8%, 1.3302 daily pivot point S1. 1.3201 daily pivot point S2, 1.3156 daily pivot point S3, 1.3083 daily pivot point R1, 1.3319 daily pivot point R2, 1.3392 daily pivot point R3, 1.3437 NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD CAD price analysis remains vulnerable near multi-month lows, just above 1.3200 marked. ntvforex.com news ID 1EC32C 4 minutes ago by Haresh Menghani. USD CAD edged lower for the fourth consecutive session on Thursday. The technical setup remains tilted firmly in favor of bearish traders. The stage seems set for a slide towards descending channel support. The USD CAD pair remained depressed for the fourth straight day and dropped to near 6-month lows, around the 1.3210 region during the mid-European session on Thursday. The recent downfall since late June has been along a downward sloping channel, which points to a well-established bearish trend and supports prospects for further weakness. Meanwhile, technical indicators on the daily chart maintained their bearish bias and are still far from being in the oversold conditions, reinforcing the negative outlook. Hence, some follow-through weakness below the 1.3200 mark, towards challenging the trend channel support near the 1.316055 region, now looks a distinct possibility. On the flip side, any attempted recovery might now confront fresh supply near the 1.3255560 horizontal zone, which if cleared might trigger a near-term short covering bounce. NBSP the pair might then aim to reclaim the 1.3300 mark and aim towards testing the descending trend channel resistance, around the 1.336070 region. USD for Canadian dollars hourly chart technical levels to watch. USD CAD overview today last price 1.3219 today daily change 0.0027 today daily change percent 0.20 today daily open 1.3246 NBSP trends daily SMA 20 1.3393 daily SMA 50 1.3493 daily SMA 100 1.374 daily SMA 200 1.3532 NBSP levels previous daily high 1.3347 previous daily low 1.3229 previous weekly high 1.3451 previous weekly low 1.3234 previous monthly high 1.3646 previous monthly low 1.3331 daily Fibonacci 38.2% 1.3274 daily Fibonacci 61.8% 1.3302 daily Pivot point S1 1.3201 daily pivot point S2 1.3156 daily pivot point S3 1.3083 daily pivot point R1 1.3319 daily pivot point R2 1.3392 daily pivot point R3 1.3437 NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Dollar remains offered analysis http ntvforex.com news ID 086927813220 12:13:56 p.m. Overview. The poor price action on Tuesday in the S&P 500 was shrugged off, and new highs for the recovery were made as the record high nears. NBSP the dollar, on the other hand, seemed to find plenty of sellers against most of the major currencies. The yen was a notable exception. The dollar traded above 107 Japanese yen for the first time nearly 3 weeks yesterday, but could not sustain the move today. NBSP the yen is also trading at new lows for the year against the euro. The soft yen gave Japanese shares a boost. NBSP most markets in the region rose except Hong Kong and Australia. The MSCI Asia Pacific Index made new 6-month highs today. NBSP European shares are slightly lower, and US stocks are flat. NBSP bond yields are a little lower across the board, with the US 10-year pulling back 3 basis points to around 0.65%. NBSP New Zealand's benchmark 10-year yield fell 9 basis points following yesterday's decision to expand its bond purchases. The dollar is on its back foot, slipping against all the major currencies but the New Zealand dollar. NBSP the euro, which tested support in front of $1.17 yesterday, is knocking on $1.1840, highs for the week. NBSP among emerging market currencies, the Turkish lira remains under pressure as the government's defense has crumbled. Gold is firm, but below yesterday's $1,950 high. NBSP light sweet crude for September delivery is flat near $42.75. NBSP last week's high was around $43.50, where the 200-day moving average is found. NBSP Asia Pacific. The New Zealand dollar proved resilient to the central bank's decisions to boost its bond purchases and threaten negative yield and buying foreign bonds if necessary. NBSP after falling to 1-month lows near $0.6525, the Kiwi recovered to $0.6600 in the North American morning before consolidating. NBSP it found support near $0.6560 today. NBSP a decision will be made after the weekend about the election scheduled for September 19. NBSP the development of the outbreak and length of the needed lockdown will be better understood. NBSP Prime Minister Ardern and the governing Labour Party is widely expected to win the election and is ahead in recent polls 55% 28% over the National Party. NBSP decision to postpone the vote would have the National Party's support. NBSP the leader suggested a new date in November or even next year would be acceptable. Ostensibly, it would give the National Party time to muster a stronger campaign. NBSP Australia created 114.7k jobs in July, half the revised 228.4k in June to 10.8k initially. The unemployment rate edged up to 7.5% from 7.4% as the participation rate jumped to 64.7% from 64.1%. NBSP the median forecast in the Bloomberg survey called for an increase of 30k jobs, and in the actual report, the full-time positions rose by 43.5k after falling a revised 23.6k in June. NBSP part-time employment rose by 71.2k after a 252k revised increase previously. NBSP the full impact of the outbreak and lockdown in Victoria will likely be seen in next month's report. NBSP the People's Bank of China is one of the few major central banks that has not engaged in long-term asset purchases associated with quantitative easing. However, a small item in its balance sheet caught analysts' attention, and some argue this could represent bond purchases by the PBOC. More data due tomorrow may shed light on it. NBSP a category of sovereign bond ownership that includes central banks and clearing houses rose about 18 Chinese yuan BLN to 1.78 trillion Chinese yuan $256 BLN in July. NBSP while this could be PBOC helping to facilitate smooth auctions, we are skeptical. The amount is too small to be of policy significance. NBSP we are more persuaded by suggestions that it is likely the result of a foreign central bank buying Chinese bonds through its currency swap arrangement with the PBOC. NBSP China's 10-year bond yields 2.94%. NBSP the dollar is about a 35-tick range against the Japanese yen, holding below 107 Japanese yen. There are two expiring options to note. NBSP the first is for about $890 MLN at 106 Japanese yen and 70 sen, and the other is for $850 MLN at NBSP 107 Japanese yen. NBSP initial support is seen near 106 Japanese yen and 40 sen. NBSP the Australian dollar approached the high for the week $0.7190, but demand fizzled, leaving it flat near $0.7165. NBSP nearby support is pegged near $0.7140. NBSP the New Zealand dollar is trading within the ranges seen yesterday, but look for a retest on the low it saw near $0.6525. NBSP the greenback fell to new 5-month lows against the Chinese yuan 6.9310 Chinese yuan but bounced to 6.9455 Chinese yuan to snap a 3-day fall. NBSP the PBOC set the dollar's reference rate at 6.9429 Chinese yuan, in line with expectations. NBSP Europe the US shifted some of its $7.50 BLN tariffs on European goods for retaliation against the subsidies for Airbus that the WTO ruled were illegal. NBSP it appears that some UK and Greek goods were removed from the list of goods and were added to Germany and France. NBSP jams and knives were now subject to 25% tariffs. NBSP UK biscuits and gin were given a reprieve, though the tariff on other UK alcohol remained. NBSP we have noted since US actions began that the other shoe has yet to drop. NBSP that shoe is that charges that Boeing received illegal subsidies from the US are making their way through the WTO process, and a decision could be issued as early as next month. NBSP Italy successfully sold 30-year bonds today at 1.91%, a plump yield compared with other bonds of that maturity in Europe. NBSP Spanish and Portuguese yields for that tenor are a little below 1.1%. NBSP Italy raised 1.25 BLN euros for bonds that mature in 2050. NBSP the euro is trading at its best levels for the week, having bounced smartly yesterday from the week's lows near $1.1710. NBSP if $1.17 is the lower end of the range, the $1.1900 area represents the upper end. NBSP. The buying in Europe has left the intraday momentum indicators stretched. NBSP initial support is seen near $1.1825, where an option for about 635 MLN euros expires today. NBSP note that a 1.5 BLN euro option at $1.1900 expires tomorrow. NBSP sterling held support near $1.30 yesterday and is pushing toward $1.31 today. NBSP an option for £750 sterling MLN at $1.30 will roll off today. NBSP the week's high was set around $1.3130, and that may be too far for today as the momentum stalls in late morning turnover in Europe. NBSP America. The median forecast calls for another small decline in weekly jobless claims to 1.1 MLN from almost 1.19 MLN. NBSP it still seems unreasonable high given that the economy appears to be expanding at a 14%-20% annualized clip. NBSP a disappointing increase would likely spur dollar sales, and an unwind of some of this week's increase in yields. The executive order on the federal unemployment insurance has not been implemented yet, and that may have discouraged new applications. Despite a solid reception to the U.S. 10-year note sale, the yield rose 3 basis points to 67.5 BP. NBSP it was the fourth consecutive increase, but that streak is set to end today. NBSP after the markets close today, the Fed makes its weekly report. NBSP recall that its balance sheet peaked 2 months ago and has fallen in 6 of the past 8 weeks for a cumulative decline of about $223 BLN. NBSP during the same 8-week run, the ECB's balance sheet has grown by around 755 BLN euros. NBSP the euro has appreciated against the dollar for the last 7 consecutive weeks. NBSP Mexico's central bank is widely expected to cut the overnight rate from 50 BP to 4.50%. NBSP the rate stood at 7.25% in January. NBSP Banxico cut rates at 5 consecutive meetings through June before standing pat in July. NBSP headline CPI has risen to about 3.6% from 2.15% in April, but real and nominal rates remain relatively high. NBSP the peso has appreciated by a little more than 8% over the past 3 months, leaving it down roughly 15.4% for the year. NBSP assuming a 50 BP cut is delivered today, we suspect there is scope for another 50 BP cut in Q4. NBSP the greenback has slipped to new 6-month lows against the Canadian dollar near 1.3220 Canadian dollars. NBSP the low for the year was set in early January just below 1.2960 Canadian dollars. NBSP the 1.3260 Canadian dollars area may offer the nearby cap today. NBSP rising equities and firm oil prices. NBSP note that Canada's 2-year yield near 30 BP is almost twice the US yield. NBSP the US dollar is coiling in tight ranges against the Mexican peso. NBSP the 22 Mexican pesos and 25 centavos 22 Mexican pesos and 55 centavos has confined the greenback this week is within a narrower 22 Mexican pesos and 30 centavos 22 Mexican pesos and 40 centavos range now. NBSP it has been recording lower highs for the past 6 sessions. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. European indices fall on tariff fears with US analysis. http ntvforex.com News ID 9A77528813 2012-2033 p.m. Almost all European indices were trading in the red this afternoon, plummeting from 3-week highs. Fear gripped the market when the office of the US Trade Representative announced plans to modify tariffs on EU imports. The proposal suggests tariffs as high as 25% on a range of European goods including liquor, olive, cheese, and wine. Washington also plans to impose a 15% tariff on Airbus aircrafts, despite the company's efforts to ensure compliance with the UDO's decision on state aid. Shares of Airbus opened 1.51% lower in Paris on the news. The German DAX 30 slipped 0.29%, while the CAC 40 lost 0.25% and the STOXX 600 fell by 0.45%. The decline in the FTSE 100 was sharper, by 1.21%. Positive EU data failed to revive investor sentiment this afternoon. France's unemployment rate declined to 7.1% in the second quarter, the lowest level since 1983. Wholesale prices in Germany declined 2.6% in July. NBSP After an initial spike in oil prices over the vaccine deal between US and Moderna, Brent crude prices traded lower to $45.20 per barrel. This followed a monthly report by OPEC, which predicted that global oil demand will contract more steeply than was earlier projected. The International Energy Agency has also slashed its oil demand forecast for 2020, its first downgrade in many months. The US dollar continued to weaken against a basket of currencies. The dollar index fell to 93.1, its lowest level in a week, due to the absence of any signs of progress around the US coronavirus package. NBSP In upcoming economic data, the US initial jobless claims weekly report will be the one to look out for. The report is expected to show a slight decline to 1.12 million in the latest week, from 1.19 million in the week ending August 8. The US 30-year bond auction is also in the lineup today, which will have a substantial impact on the greenback. NBSP Euro-USD Despite dismal equity markets, the euro maintained its strength against a weak US dollar. After dipping to a low of 1.1709 on Wednesday, the euro has made a sharp comeback, and was trading at 1.1832 around 9:30 am GMT. It has recaptured the 50-day SMA on the 4-hour chart, indicating that bulls are in control for now. The pair could now face resistance at the 1.1850 level. RSI remains below 70, which suggests overbought conditions. NBSP USD JPY Washington's fiscal problems and the country's sluggish labor market weighed on the US dollar. The greenback continues to suffer in an uncertain environment, trading lower at 106.75. The pair faced resistance at the 107 level, and subsequently retracted to the nearest support level of the 50-day EMA at 106. In case the pair breaches this support level, it could gain more downside momentum to rest at the next 20-day EMA support level at 106.20. NBSP GBP USD After declining to one-week lows on Wednesday, the GBP USD regained significant upward momentum this afternoon. The pair is now eyeing the 1.31 mark, mainly due to softness in the US dollar. Technical levels to watch will be the 20-day SMA at 1.2919 and 50-day SMA at 1.2687. The US initial jobless claims report, scheduled for release later in the day, will determine the fate of the US dollar this evening, and may offer attractive trading opportunities in the US session. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. The CAD JPY looks ready for a correction analysis. http ntvforex.com News ID 147488 13/20/2012 15:43 p.m. The CAD JPY has advanced by more than 3.5% since the beginning of August, and the peak of this bullish run was reached yesterday when the pair tested the strength of a psychologically important Fibonacci retracement level. Similarly to the last time the pair traded around a prominent level, the price action is once again quite likely to rebound and establish at least a minor correction. As it's about to be seen, there is a confluence of underlying evidence signaling that the market is ready to take a break from developing the recent upswing and retrace back. Today's analysis examines the opportunities for swing trading from the currently emerging peak of the uptrend, as well as longer-term position trading opportunities for riding the broader trend. It should be, however, stated that the prevailing market sentiment is ostensibly range trading, which means that the bulls should be aware of the fact that the currently developing uptrend is going to potentially emerge from a current range. What this environment entails are heightened volatility, prospects for erratic fluctuations around crucial levels of support and resistance, and sudden reversals. In other words, the bears can exploit the contrarian trading opportunities in the short term. In contrast, the bulls should continue monitoring the underlying sentiment and keep an eye for signals that the market is indeed transitioning from trading in a range to trending. NBSP 1. Long-term outlook. The CAD-JPY is, for the time being, range trading in a large consolidation area that spans between the 38.2% Fibonacci retracement level at 78.002 and the 61.8% Fibonacci retracement level at 80.580. As can be seen on the daily chart below, the aforementioned rebound occurred from the latter, and that is what gives credence to the expectations for a new bounce back now that the pair is trading near the latter. The expectations of the bears for the establishment of a correction in the short term and the anticipations of the bears for the development of a new uptrend in the longer term are not mutually exclusive. A minor bearish correction now is to be expected given the range trading conditions, but at the same time, it could serve the role of a transitionary stage as the market attempts to form a new uptrend. In other words, the market could retrace back towards one of the three previous peaks, while the longer-term target after a decisive breakout remains the major resistance level at 81.750. As regards the expectations for the formation of a bearish correction in the short term, the current reading of the ADX indicator can substantiate them. The indicator has been threading below the 25-point benchmark since the 11th of June, which underscores the robust range trading sentiment in the market. Consequently, the underlying conditions are ideal for rebounds from psychologically important support and resistance levels, and the range's upper boundary at 80.580 is just that. Additionally, the stochastic RSI indicator has recently entered into its overbought extreme, which is very likely to compel the bears to start placing more selling orders given the aforementioned range trading conditions. That is so because contrarian trading is more prevalent when the market remains flat and without an easily recognizable direction. NBSP 2. Short-term outlook. As can be seen on the 4H chart below, the direction of the market is more clearly visible on charts with smaller time frames. Despite the broader range trading conditions, the price action is not completely devoid of clearly defined swings. That is why the Elliott wave theory can be applied to study the nature and potential direction of these swings. After the latest rebound from the 38.2% Fibonacci, which commenced with a morning star pattern, the price action went on to establish one swing high at 79.866 and one swing low at 78.960. These two can be perceived as the initial stages in the development of a broader 1-5 impulse wave pattern. The 1-2 leg is the first retracement of the broader pattern, and the subsequent 2-3 leg represents the second impulse. Given the aforementioned reasons justifying the expectations for a rebound from the 61.8% Fibonacci, the market could have already established a new peak at point 3. If this is indeed true, then the market would be ready to develop a new retracement leg 3-4. The narrowing parabolic SAR indicator confirms this assertion. There are two contending levels on which a bottom point 4 could be reached. Those include the minor support level at 80.00, which has psychological significance, and the other minor support level at 79.650. Nevertheless, it should also be noticed that the underlying momentum remains mostly bullish. This can be discerned from the MACD indicator. A possible crossover between the faster 12-day EMA with the slower 26-day EMA would underpin a change in the direction of the momentum, and confirm the expectations for a new correction. Finally, there is a clearly visible divergence on the hourly chart below. While the price action has been able to establish consecutively higher peaks at 80.312 and 80.828 respectively, the waves of the MACD have not risen with the same pace. This divergence entails waning bullish momentum and is a suitable prerequisite for the emergence of a new bearish correction. At the same time, the Ichimoku cloud indicator continues to demonstrate the persistence of bullish bias, which does not preclude the possibility for the emergence of a new correction. The price action could fall to the bottom of the cloud, which notably coincides with the psychologically important minor support at 80.00 before the bulls take back control. NBSP 3. Concluding remarks: the CAD JPY continues to be range trading, which should be considered by bulls and bears alike before either of them places any orders. There is a strong bullish commitment at present, however. It remains to be seen whether it would be enough to keep the price action concentrated above the range's upper boundary, which is represented by the 61.8% Fibonacci. Meanwhile, the timing seems right for the establishment of a minor bearish correction. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Euro JPY bear trend removed with ease. Next meaningful resistance at 127.5272. A credit Suisse at ntvforex.com. News ID E6A0518. Minutes ago by NTV Forex team. Euro JPY has seen a further impressive acceleration NBSP with the 50% retracement of the 2018-2020 bear trend at 125.94 removed with ease. Economists at Credit Suisse stay biased higher with the next meaningful resistance seen at the 127.5272 2019 high. Key quotes: A Euro JPY has seen a further impressive acceleration higher after successfully holding a cluster of supports at 124.3424, including its accelerated 13-day average, now at 124.87, and resistance at 125.94 has been cleared with ease. The 50% retracement of the 2018-2020 downtrend. This suggests the trend should stay directly higher with resistance seen at the April 2019 high at 126.84 next, with tougher resistance then seen next at 127.5272. The 2019 high and potential downtrend from late 2014 NBSP. We would expect the 2019 high at January 27, 72 to prove a tougher initial barrier and would expect an initial pullback from here. A direct break though can see resistance next at the 61.8% retracement of the fall from 2018 at 128.67. NBSP. A near-term support moves to 125.76, then 125.51, the 124.9587, which ideally holds to keep the immediate risk higher. A break can see a setback to 124.5033. But with fresh buyers expected here. A NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Breaking: less than 1 million Americans applied for unemployment benefits last week. ntvforex.com. News ID C3CF5C. minutes ago by NTV Forex team. There were 963,000 initial claims for unemployment benefits in the NBSP US NBSP during the week ending August 8 ST, the data published by the U.S. Department of Labor Dole revealed on Thursday. This figure came in better than the market expectation of 1.1 million, and NBSP was the first reading below 1 million since mid-March. Market reaction: the US dollar index edged slightly higher from daily lows after this data and was last seen losing 0.27% on the day at 93.17. Additional takeaways: the 4-week moving average was 1,252,750. A decrease of 86,250 from the previous week's revised average. The advanced seasonally adjusted insured unemployment rate was 10.6% for the week ending August 1, a decrease of 0.4 percentage point from the previous week's unrevised rate. The advance number for seasonally adjusted insured unemployment during the week ending August 1 was 15,486,000, a decrease of 604,000 from the previous week's revised level. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Euro GBP alternates gains with losses around 0.9040 http ntvforex.com news ID 3D3E29 3 minutes ago by Pablo Piavano. Euro GBP stays sidelined around the 0.9040 region on Thursday. Solid risk appetite trends lend support to the euro and the sterling. UK-EU traded talks expected to resume the next week. The positive momentum in the risk complex is sustaining the upside in both the sterling and the shared currency, motivating Euro GBP to trade without a clear direction in the 0.9040 area for the time being. Euro GBP locked in within a consolidative theme. Euro GBP is extending the monthly range-bound theme between 0.8970 and 0.9060 following gains in the British pound and its former European peer, all in response to the sharp correction lower in the greenback. In the meantime, the quid managed well to leave behind Wednesday's GDP data, which showed the economy contracted more than 20% during the April-June period, the largest drop since 1955. On the opposite side, auspicious readings from the German ZEW survey and the Centix index lent extra wings to the single currency SPF late. In the calendar, German final CPI contracted at a monthly 0.5% in July and 0.1% from a year earlier. Later in the NA session, the always relevant initial claims should keep the dollar under pressure. Euro GBP key levels: the cross is losing 0.07% at 0.9032 and a breach of 0.8969 monthly low August 11 would expose 0.8937 monthly low July 10 and then 0.8864 monthly low June 9. On the flip side, the initial hurdle emerges at 0.9058 monthly high August 5 seconded by 0.9148 monthly high July 27 and finally 0.9175 monthly high June 21. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold remains confined in a range, around $1,930 area at ntvforex.com news ID 2B83CD 3 minutes ago by Haresh Menghani. A combination of factors assisted the precious metal to gain traction on Thursday. The U.S. fiscal impasse undermined the USD and remained supportive of the uptick. The positive move lacked any strong follow-through, warranting caution for bulls. Gold edged lower during the early North American session and retreated to the lower end of its daily trading range, albeit lacked any strong follow-through selling. Following the previous day's rather volatile price swings, the precious metal managed to regain some positive traction on Thursday and was being supported by a combination of factors. The US dollar remained depressed amid uncertainty over the next round of the US fiscal stimulus measures, which, in turn, was seen as one of the key factors that benefited the dollar-denominated commodity. This, coupled with a weaker tone surrounding the US Treasury bond yields, further undermined the greenback and provided an additional boost to the non-yielding yellow metal. However, expectations that the U.S. lawmakers will eventually reach a consensus on the stimulus measures held investors from placing any aggressive bullish bets and kept a lid on any strong gains for the precious metal. On the economic data front, the U.S. initial weekly jobless claims came in much lower than consensus estimates and exerted some downward pressure over the past hour or so. The commodity dropped to the $1,920 region after data published from the U.S. revealed that 963,000 Americans claimed unemployment-related benefits during the week ending August 8, lower than 1.12 million anticipated. The metal has now moved back to its intraday trading range and was last seen hovering around the $1,930 region. It will now be interesting to see if bulls are able to take back control or the commodity continues with its subdued range-bound trading action. The focus remains on the U.S. political deadlock over the stimulus package to support economic recovery from the coronavirus pandemic. Technical levels to watch. XAU/USD overview. Today last price 1924.05, today daily change 7.97, today daily change percent 0.42, today daily open 1916.08, NBSP trends daily SMA 20 1936.02, daily SMA 50 1829.7, daily SMA 100 1762.07, daily SMA 200 1649.62, NBSP levels. Previous daily high 1949.4, previous daily low 1863.24, previous weekly high 2075.32, previous weekly low 1960.67, previous monthly high 1984.8, previous monthly low 1757.7, daily Fibonacci 38.2%, 1916.49, daily Fibonacci 61.8%, 1896.15, daily pivot point S1 1869.75, daily pivot point S2 1823.41, daily pivot point S3 1783.59, daily pivot point R1 1955.91, daily pivot point R2 1995.73, daily pivot point R3 2042.07, NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD forecast holding on to gains, poised to test January 1915 analysis. http ntvforex.com. News ID 7AF049813 12:47:56 p.m. EUR/USD current price 1.1838. German July inflation remained unchanged from the previous estimates, at 0.1% YoY. U.S. employment data unexpectedly improved, with unemployment claims below 1 million. EUR/USD holds on to higher ground, bearish only below 1.1790. The EUR/USD pair recovered the 1.1800 level as demand for the greenback receded, reaching a higher high for the week at 1.1853. The pair held near the mentioned high ahead of US data and after Germany reported July inflation, which remained unchanged at 0.1% YoY. Enthusiasm fades, with global equities under pressure and government debt yields stable near their recent highs. US data surprised to the upside, as initial jobless claims for the week ended August 7 fell to 963K, the first time below 1M since mid-March. Continuing jobless claims for the week ended July 31 shrank to 15.486M, also beating the market's expectations. EUR/USD short-term technical outlook. The greenback got a mild boost with better-than-expected US employment-related data, with US futures also advancing with the headline. The EUR/USD pair, however, is trading in the 1.1830 price zone, still bullish in the short term. The 4-hour chart shows that the pair continues to develop well above its moving averages, while technical indicators eased modestly but hold well above their midlines. The pair could turn bearish on a break below the 1.1790 support, while a retest of the year high will be likely on an extension above 1.1870. Support levels 1.1790, 1.1740, 1.1690. Resistance levels 1.1870. January 1915. January 1950. View live chart for the EUR/USD. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Get ready for SOFR low rates for foreseeable future analysis. http ntvforex.com News ID CA047D813-2021 04:38 p.m. Executive Summary. At the time of our last SOFR update in early April, LIBOR rates and SOFR had diverged significantly due to the financial market dislocations that the pandemic imparted to the global economy. However, normalcy has more or less returned to money markets due, in large part, to the steps that the Federal Reserve has taken to ease tensions in financial markets. If, as we expect, the Federal Open Market Committee (FOMC) keeps its target range for the Fed funds rate unchanged at 0.00% to 0.25% through at least the end of next year, then SOFR should remain at rock bottom for the foreseeable future. Market participants should continue to be prepared to transition from LIBOR to SOFR as soon as the end of 2021. NBSP normal has returned to money markets. When we wrote our last SOFR update in early April, the global economy was still reeling from the initial shock of the lockdowns that many countries implemented in response to the pandemic. As we noted at that time, 1-month LIBOR and SOFR, which usually are highly correlated, diverged significantly starting in mid-March. Figure 1. Although SOFR followed the FOMC's target range for the Fed funds rate lower, 1-month LIBOR moved higher in late March and early April. This rise in LIBOR, which is an unsecured interest rate, reflected, at least in part, general tensions in credit markets that surfaced in March. Figure 2. Source: Bloomberg LP and Wells Fargo Securities. Fast forward 4 months, and the situation has returned largely to normal. The prompt response of policymakers, especially steps that the Federal Reserve has implemented to support credit markets, has caused corporate bond spreads to compress nearly all the way back to levels that prevailed in late February. Figure 2. Consequently, 1-month LIBOR has receded from roughly 1.00% in early April to 0.17% at present. At the same time, SOFR has edged up from its late March low of 0.01% to 0.10% currently. What is going on here on the LIBOR front? Improved liquidity and tighter spreads in short-term, unsecured lending markets, particularly commercial paper, have helped push 3-month LIBOR down. 1. Diminished concern about bank credit quality has likely also helped, as have the Federal Reserve's numerous actions to improve access to dollar funding through its various liquidity programs. On the SOFR side, more tranquil financial markets have likely reduced the demand for secured places to park money on a short-term basis. At the peak of the crisis, owning Treasury bills outright or lending overnight in the Treasury repo markets were among the safest places to keep cash. In addition, the flood of Treasury issuance in recent months has also helped to push up SOFR. Since February, the Treasury Department has issued a net $2.5 trillion of T-bills, and this deluge of supply has pushed down the price of bills, i.e., pushed up their yield. As the rate on the 1-month T-bill has crept up from its low of 0.107% in late March to 0.07% at present, so too has SOFR. That said, SOFR is more or less in the middle of the Fed's target range for the Fed funds rate, currently between 0.00% and 0.25%, which is typical during normal times. NBSP. Download the full special reports. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD holds on to higher ground, bearish only below 1.1790. http ntvforex.com News ID 033AAE 1 minutes ago by NTV Forex team. The greenback got a mild boost with better than expected US employment-related data, with US futures also advancing with the headline. The EUR/USD pair, however, is trading in the 1.1830 price zone, still bullish in the short term, and Forex's chief analyst Valeria Bednarik reports. Key quotes: A U.S. data surprised to the upside, as initial jobless claims for the week ended August 7 fell to 963K, the first time below 1M since mid-March. Continuing jobless claims for the week ended July 31, shrank to 15.486M, also beating the market's expectations. The 4-hour chart shows that the Euro-USD pair continues to develop well above its moving averages, while technical indicators eased modestly but hold well above their midlines. The pair could turn bearish on a break below the 1.1790 support, while a retest of the year high will be likely on an extension above 1.1870. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis battle over $1,933 critical for the recovery. A confluence detector. ntvforex.com news ID CF4A3B 2 minutes ago by Yohai Elam. Gold is looking for a new direction after crashing by $200 before recovering by $100. Some of the recent moves were fueled by US bond auctions. These have been causing jitters in yields, sending XAU-USD down when returns rose and doing the opposite when the tide turned again. NBSP. Another reason for the decline is profit-taking. The precious metal entered overbought conditions on several charts. How is gold positioned now? NBSP. The NBSP Technical Confluences Indicator NBSP is showing that fierce resistance awaits at $1,933. Which is a dense cluster including the simple moving average 10-15M, the Fibonacci 23.6% 1 month, the Bollinger Band 15 minutes middle, and the SMA 10-1H. NBSP. The next target is close $1,936, which is where the BB 1-day middle and the BB 15 minutes upper hit the price. NBSP. Some support awaits at $1,917. Which is where the Fibonacci 38.2% 1-day hits the price. NBSP. A more considerable cushion is at $1.910, which is the confluence of the BB 1-hour lower and the PP 1-week support too. Overall, resistance is stronger than support. Key XAU-USD resistances and supports. Confluence detector. The confluence detector finds NBSP exciting opportunities using technical confluences. NBSP. The TC is a tool to locate and point out those price levels where there is a NBSP congestion of indicators, NBSP moving averages, Fibonacci levels, pivot points, etc. Knowing where these congestion points are located is very useful for the trader, and can be used as a basis for different strategies. Learn more about technical confluence. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. ETA faulty extrapolation to see falling claims as a recovery indicator analysis. http ntvforex.com news ID 16F258813 2021 PM Outlook. Any sparks of fear and anxiety over future inflation are premature and should get snuffed out with the arrival of buckets of cold water in the form of current data. Unfortunately, today's unemployment claims may not be part of that. Expectations are for a drop in initial claims to 1.1 million in the latest reporting week. The number alone doesn't tell the story, because job recovery that reduces claims is not the same thing as actual growth, and worse, those not making claims are absent not because they have jobs, but rather because they have exhausted their ability to claim or state offices are still backed up. ETA's faulty extrapolation to see falling claims as a recovery indicator. We still will have 21 straight weeks in which claims are over 1 million. Besides, the loss of the extra $600 per week in benefits is going to start hitting real data, real soon. And loss of confidence in the federal government to deal with recovery needs should contribute to gloom. Economists are united in expecting personal consumption to fall, along with more job losses, a wave of evictions, etc. See the chart from 538.com. Underneath that chart is another from the Census Bureau on a housing uncertainty from the Daily Shot. 7 of the states where people did not pay July rent and are pretty sure they can't pay August rent are Republican states. As noted above in the distribution of COVID-19 deaths, the South is heavily represented there, too. So we have a bunch of rednecks who refuse to wear masks, becoming homeless and dying in droves, and these are the guys who have the guns. How long before we have another mass shooting? We see glimpses of desperation all over the place. One of them is the 100 million doses of vaccine the feds contracted with Moderna to produce. Moderna has never before produced a commercially viable vaccine. Early results look good. They got antibody ASA, but paying an unproven company $1.525 billion, $2.48 billion with all the incentives is nothing short of reckless and desperate. We hope Moderna pulls it off, but it's not hard to see how a Harvard Business School class would judge this decision. When it's desperation driving risk on, it's not hard to see risk off right around the next corner. This may be behind some of the dollar's lingering appeal. We think the rise in yields should be short-lived. The market chooses to perceive inflationary risk, but the Fed is adamant, and in the long run, the Fed rules. Besides, the Fed's economic analysis is deeper, wider, and just plain better than the market's, which is why we keep getting warnings from various Fed officials that we really, truly, honestly do need another stimulus recovery spending package, and right away, please. It's not new to have divergence between the market viewpoint and the central bank viewpoint. The market often says the Fed is behind the curve. This is almost never true, but over the years the market has increasingly become better at twisting Fed arms. In a sense, current business Guy Powell is a better Fed chief than the economists who preceded him because he uses only one hand at a time and sticks to his story. This is not to say Bernanke and Yellen were wusses, but they were perhaps overly willing to see alternative explanations and flaws in models. Look at all that time we wasted talking about the neutral rate, a hypothetical construct that never did anyone any good. To return to the immediate subject, desperation, Bloomberg tries to make bricks from straw by cheering the Gilead announcement of cooperation with 40 companies around the world to produce enough remdesivir to treat 2 million people by year-end. Bloomberg says it's practically heartwarming. But 2 million treatments? The world already has 20 million cases and the US, over 5 million. We fail to see how this mitigates desperation. Where does all this leave us when in doubt? Fiddle with the chart. See the euro on a weekly basis. It has managed to retrace a near-perfect 62% of the down move from February 2018. We normally expect a pullback from that level and then a moment of truth when players decide whether to take it to the moon back to 1.2550 or to give up. Our view has been that a euro recovery could be based on pandemic response and faster economic recovery, but it's a weak argument when all of Europe still has negative rates. In a nutshell, be careful shorting the dollar. NBSP, it may have muscle for the wrong reason, saw steroids, but it does have muscle, despite the millstone of Congress around its neck. NBSP. This is an excerpt from the Rockefeller Morning Briefing, which is far larger, about 10 pages. The briefing has been published every day for over 25 years and represents experienced analysis and insight. The report offers deep background and is not intended to guide FX trading. Rockefeller produces other reports in spot and futures for trading purposes. To get a 2-week trial of the full reports plus trader's advice for only $3.95. Click here NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. NZD/USD struggles to pull away from lows after US data, stays near 0.6560. http ntvforex.com. News ID A373D7 4 minutes ago by Aaron Sengezer. NZD/USD stays under modest bearish pressure in early American session. Weekly jobless claims in US fell below 1 million for the first time in 5 months. US dollar index stays in the negative territory below 93.20. The NZD-USD pair rose toward 0.6600 during the Asian session, supported by a sharp upsurge witnessed in the positively correlated AUD-USD pair, but struggled to preserve its bullish momentum. With the risk-averse market atmosphere making it difficult for the Kiwi to find demand, the pair edged lower and was last seen losing 0.22% on the day at 0.6560. RBNZ's dovish shift continues to hurt NZD. In addition to the dismal market mood, the dovish shift seen in the Reserve Bank of New Zealand's, which expanded its quantitative easing to 100 billion NZD, NBSP policy outlook on Wednesday doesn't allow the NZD to gather strength against its peers. NBSP commenting on the RBNZ's policy announcement, NBSPA the RBNZ will want to keep its options open. In this regard, a negative OCR and foreign asset purchases will remain options on the table, said UOB Group analysts. The RBNZ may consider expanding the program to include other assets including foreign assets. This could help cap excessive gains in the New Zealand dollar. Meanwhile, the data published by the U.S. Department of Labor showed on Thursday that the weekly initial jobless claims fell below 1 million for the first time since the unprecedented upsurge witnessed back in March. Although the initial market reaction provided a modest boost to the greenback, the US dollar index failed to stage a convincing recovery and was last seen losing 0.33% on a daily basis at 93.12. There won't be any significant macroeconomic data releases in the remainder of the day. In the early Asian trading hours on Friday, the Business NZ PMI data from New Zealand will be looked upon for fresh catalysts. Technical levels to watch for NZD-USD overview today: last price 0.6557, today daily change 0.0021, today daily change percent 0.32, today daily open 0.6578, NBSP trends daily SMA 20 0.6625, daily SMA 50 0.6545, daily SMA 100 0.6304, daily SMA 200 0.6366, NBSP levels: previous daily high 0.6601, previous daily low 0.6524, previous weekly high 0.6691, previous weekly low 0.6575, previous monthly high 0.6716, previous monthly low 0.644, daily Fibonacci 38.2%, 0.6572, daily Fibonacci 61.8%, 0.6554, daily pivot point S1 0.6535, daily pivot point S2 0.6491, daily pivot point S3 0.6458, daily pivot point R1 0.6611, daily pivot point R2 0.6644, daily pivot point R3 0.6688, NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Chain link technical analysis http://ntvforex.com. News ID F5389B USD continues going up and hits $17.73. http://ntvforex.com. News ID F5389B 2 minutes ago. http://ntvforex.com. News ID F5389B USD exploded again even though the digital asset was already overextended. http://ntvforex.com. News ID F5389B bulls are extremely strong right now and eyeing up $18. NBSP ETA definitely hard to predict when. http://ntvforex.com. News ID F5389BAS rally will stop or at least pause as it seems the digital asset is not facing a lot of selling pressure. Chainlink is currently trading at $17 after a brief pullback towards $16, but the bullish momentum remains strong. http://ntvforex.com. News ID F5389B USD daily chart clearly. http://ntvforex.com. News ID F5389BAS momentum is unstoppable even though the daily RSI is extremely overextended. The trading volume has been increasing significantly over the past week, which indicates the breakout is not just a random pump. NBSP bulls have defended the daily 12 EMA several times in a row and bounced quite hard from it. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD/JPY sits near multi-week tops, bulls await a move beyond 107.00 marked ntvforex.com news ID E5F1475 minutes ago by Haresh Menghani. USD/JPY reversed an early dip to the 106.55 region and turned positive for the day. A combination of factors held investors from placing bullish bets and capped gains. The USD/JPY pair moved back closer to 3-week tops set on Wednesday, with bulls still awaiting a sustained move beyond the 107.00 round figure mark. They managed to attract some dip buying near the 106.55 region and moved into the positive territory for the 5th consecutive session on Thursday. The uptick was supported by a goodish intraday bounce in the U.S. Treasury bond yields, albeit a combination of factors kept a lid on any strong follow-through positive move, at least for the time being. The political deadlock over the next round of the U.S. fiscal stimulus measures continued exerting downward pressure on the U.S. dollar, which remained depressed despite upbeat U.S. macro data. According to the Labor Department, the number of Americans filing for unemployment benefits fell to 963,000 as against consensus estimates pointing to a reading of 1.12 million. Apart from this, a cautious mood around the equity markets extended some support to the safe haven Japanese yen. This, in turn, further contributed towards capping the upside for the USD/JPY pair. Hence, it will be prudent to wait for some strong follow-through buying beyond the 107.00 mark before positioning for an extension of the recent bounce from 5-month lows. In the meantime, the broader market risk sentiment and the USD price dynamics will be looked upon for some short-term trading opportunities. Technical levels to watch. USD/JPY overview today. Last price 106.94 today. Daily change 0.03 today. Daily change percent 0.03 today. Daily open 106.91 NBSP trends. Daily SMA 20 106.13 daily SMA 50 106.9 daily SMA 100 107.26 daily SMA 200 108.15 NBSP levels. Previous daily high 107.02 previous daily low 106.44 previous weekly high 106.47 previous weekly low 105.3 previous monthly high 108.16 previous monthly low 104.19 daily Fibonacci 38.2% 106.8 daily Fibonacci 61.8% 106.66 daily pivot point S1 106.57 daily pivot point S2 106.22 daily pivot point S3 105.99 daily pivot point R1 107.14 daily pivot point R2 107.36 daily pivot point R3 107.71 NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD pushes higher, prints new tops around 1.1850 http ntvforex.com news ID B3F2D97 minutes ago by Pablo Piavano. EUR/USD accelerates the upside and moves to highs near 1.1850. Solid appetite for riskier assets sustains the upbeat sentiment in Euro. US initial claims came in below the 1 million mark during last week. EUR/USD is extending the upside momentum for another session on Thursday, managing to reclaim the mid-1.1800s and clinch fresh multi-day peaks at the same time. EUR/USD stronger on USD selling as usual in the last couple of sessions. Sellers appear to have resurfaced around the greenback, particularly after DXY failed to surpass the key barrier in the 94.00 neighborhood. Positive results in the ZEW survey and the Centix index earlier in the week helped setting the firm note around the single currency. Adding to the improved sentiment in the broader risk galaxy, U.S. weekly claims rose less than expected while 10-year yields remain on the rise. In the meantime, investors continue to look to any developments from a potential stimulus bill, still under debate among U.S. lawmakers. In the Euro calendar, no surprises from the German CPI in July, with consumer prices contracting 0.5% inter-month and 0.1% from a year earlier. What to look for around Euro/USD pushed higher and recorded new highs near January 1920 in the second half of last week, triggering a corrective move that met solid contention in the 1.17 region for the time being. The July-August rally, while largely triggered by broad-based dollar selling and improved sentiment in the risk-associated universe, found extra sustain in auspicious results from domestic fundamentals, which have been in turn supporting further the view of a strong economic recovery following the coronavirus crisis. Also lending wings to the momentum around the euro appear the recently clinched deal on the European Recovery Fund A, which helped putting political fears within the bloc to rest for now, and the solid position of the current account in the region. Euro/USD levels to watch at the moment. The pair is gaining 0.47% at 1.1838 and a breakout of January 1916-2020 high August 6 would target January 1996 high May 14, 2018 en route to January 2032 23.6% Fibo of the 2017-2018 rally. On the downside, immediate support is located at 1.1695 monthly low August 3 followed by 1.1495 monthly high March 9 and finally 1.1448 50% Fibo of the 2017-2018 rally. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Claims adjuster jobless filings drop below 1 ma at last analysis. http ntvforex.com news ID D5E38D813-2021 38:43 p.m. In the first full week without the additional $600 weekly top-up from the federal government, fewer people filed first-time claims for unemployment insurance, continuing a trend decline over the past several weeks. NBSP incentives matter, but options are limited after factoring in the $600 weekly federal top-up. The financial benefit to would-be workers was greater than pre-pandemic wages in 36 states, which created a short-term financial disincentive to return to work. But it's not as though people had a lot of choice. There are only 5.9 million jobs available at last count compared to 16.3 million unemployed. For every job, there are 3 people who need it. NBSP trend improvement but long road to recovery. Initial jobless claims fell to 963K in the first full week of August. The level of claims is still higher than it ever was pre-pandemic and remains a glaring reminder that this recovery is only beginning, but it does feel good to be below 1M. Continuing claims also fell through the week of August 1st. The 15.5M people still receiving benefits is down 9.4M from the peak in May, but still twice as high as during the financial crisis. NBSP download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Has the stock bull's strength returned? Analysis http ntvforex.com news ID B875A1813-2021 55:03 p.m. Stocks have yet again approached the all-time highs, but on volume that wasn't this low in months. That's a red flag. The stimulus talks haven't really progressed, but markets there is no jittery sentiment as the put-call ratio stubbornly clinging to its lows show. But let us look under the hood of the stock advance as that fittingly illustrates all the above. NBSP SP500 in the short run. IALL start with the daily chart perspective. The bulls countered, but the volume leaves a lot to be desired. This is making the renewed advance to the Feb highs vulnerable in the short term as the signs are far from aligned, to put it mildly. Enter the credit markets. NBSP. The credit market saw point of view high yield corporate bonds HYG ETF Haven T exactly recovered yesterday, which means they aren't pointing in the same short-term direction as stocks. Neither are investment-grade corporate bonds LQD ETF. They have been declining for 4 days in a row, and a bottom can't be called just yet. Please see this and many more charts at my home site. Both leading credit market ratios, a high-yield corporate bonds to short-term treasuries HYG SHI and investment-grade corporate bonds to longer-dated treasuries LQDIEIA are currently pointing down, and one daily HYG SHI turnaround doesn't change that. It's concerning to see high-quality debt instruments sell off, and that includes longer-dated treasuries TLT and TLH ETFs too, as they both moved below their Tuesday's intraday lows. It's still too early to call the bid for these instruments as returning. The overextension of the S&P 500 black line relative to the HYG SHI ratio is even more pronounced now. And also more concerning given that LQDIEI is momentarily weaker than HYG SHI. With its advance, the S&P 500 is cutting into an increasingly thinning air these days. NBSP summary. Summing up, yesterday's S&P 500 upswing bucked the warning signs of many a non-confirmation. While the magnetism of the all-time Feb highs is at play, the credit markets have been diverging for quite a few days already. Neither the small caps or emerging markets have bested their recent highs. Yesterday's increase in the S&P 500 advance decline line didn't smash daily records either, which just adds to the long list of non-confirmations. Thankfully for the bulls though, technology isn't leading to the downside, and neither are semiconductors. Still, the above makes for a long list of worries for the stock bull to climb but that's what bull markets do. As traders, carefully considering each trade's risk-reward perspective, is the best course of action given the presented circumstances. Some would even say when in doubt, stay out. NBSP want free follow-ups to the above article and details not available to 99% investors. Sign up to our free newsletter today. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. unemployment claims comment analysis http ntvforex.com news ID D0E267813 2021 p.m. For the first time in 21 weeks, the number of initial claims for benefits in the United States fell below 1 million, to 964K for the week ending August 8. The number of continued claims a week earlier decreased by 604K, to 15,486K. Both figures exceeded expectations, causing a moderate growth impulse in the stock market immediately after publication. The sharp progress, despite the difficult situation with the pandemic in the U.S., is likely linked to the end of additional payments programs. Special $600 per week benefits for the unemployed came to an end in August. Thanks to this program, some workers were paid more than their regular wages, so it benefited them not to work. Last week, President Donald Trump issued an executive order that would provide $300, but it may take weeks for implementation. During this time we may see a drop in the number of unemployed, as people will agree to lower wages. This will brighten up employment figures, but lower household incomes. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US dollar index weaker, loses the 93.00 marked NTVForex.com news ID C7411C 3 minutes ago by Pablo Piavano DXY put the 93.00 support to the test on Thursday. Risk-on sentiment favors the selling bias in the dollar. U.S. initial claims came in at 963K during last week. The U.S. dollar index DXY, which tracks the greenback versus a bundle of its main rivals, keeps losing ground and tests the sub-93.00 region in the wake of the opening bell and Wall St. US dollar index offered on risk-on mood. The downside pressure remains well on the rise around the greenback in the second half of the week, forcing the index to breach the key support at 93.00 the figure and therefore paving the way for a potential deeper pullback. The firm note in the risk complex, coupled with rising uncertainty around another stimulus package mainly aimed at households and small companies, have been encouraging outflows from the dollar and dragged DXY to new weekly lows. In the docket, the always relevant initial claims rose by 963K during last week, the first reading below the 1 million yardstick since late March. Despite the improvement in the weekly indicator, there are still nearly 15.5 million Americans living off insurance benefits. Additional data saw export prices and import prices rising at a monthly 0.8% and 0.7%, respectively, during July. What to look for around USD? The index stays on the defensive after being rejected once again from the 94.00 region earlier in the week. Looking at the broader picture, investors remain bearish on the dollar against the usual backdrop of a dovish Fed, the unabated advance of the pandemic and somewhat diminishing momentum in the economic recovery, whereas persistent US-China effervescence appears on the supportive side of the greenback. On another front, the speculative community remained well into the negative territory for yet another week, supporting the view that a serious bearish trend could be shaping up around the dollar. US dollar index relevant levels at the moment. The index is losing 0.46% at 92.98 and faces the next support at 92.52 2020 low August 6 seconded by 91.80 monthly low May 18 and finally 89.23 monthly low April 2018. On the upside, a break above 93.99 weekly high August 3 would aim for 94.20 38.2% Fibo of the 2017-2018 drop and then 96.03 50% Fibo of the 2017-2018 drop. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. S&P 500 index opens little changed, Nasdaq rises supported by tech stocks. ntvforex.com news ID 1556AA 5 minutes ago by Aaron Sengezer. Wall Street's main indexes trade mixed on Thursday. Weekly jobless claims data helps market mood remain upbeat. Nasdaq Composite trades in the positive territory amid rising tech shares. Major equity indexes started the day on a mixed note on Thursday as investors assess the latest jobless claims data and the lack of progress in coronavirus aid talks. As of writing, the S&P 500 was virtually unchanged on the day at 3,380, the Dow Jones Industrial Average was down 0.15% at 27,938 and the Nasdaq Composite was up 0.4% on the day. Earlier in the day, the data published by the U.S. Department of Labor showed that there were 963,000 applications for unemployment benefits in the week ending August 8. This marked the first reading below 1 million for the first time since March. On the other hand, White House economic advisor Larry Kudlow told CNBC that coronavirus aid talks were still at a stalemate. Among the 11 major S&P 500 sectors, the healthcare index and the energy index both lose around 0.5% in the early trade. On the other hand, the communication services index is up 0.8%. S&P 500 chart daily. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, Text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US jobs recovery extends, but uncertainty and volatility remain high. Analysis http ntvforex.com News ID 3D370B 8/13/2022 13:32 p.m. US initial jobless claims dropped below 1 million for the first time in this coronavirus crisis. Alongside a significant increase in non-farm payrolls, is there room for optimism, or is the recovery slowing? Valeria Bednarek, Joseph Trevisani, and Yohai Elam debate the recent trends in the U.S. economy and markets, including the recent bond-induced dollar action. Yohai Elam NBSP U.S. initial jobless claims dropped below 1 million for the first time since the coronavirus crisis, the first in 21 weeks. NBSP Can this improvement be attributed to the expiry of federal unemployment benefits? Joseph Trevisani NBSP I believe they were extended but at a lower level by executive order. Valeria Bednarek NBSP I was thinking exactly that, maybe more people rushed to work as they had no more benefits, or at least, not as much as they had, and yes, but were extended just this weekend, and after benefits expired a couple of weeks ago. Yohai Elam NBSP As far as I understand, the executive order has yet to be executed. Joseph Trevisani NBSP Perhaps the economy is improving. Why not take the optimistic note? Yohai Elam NBSP Indeed, the data is for the week ending August 7, before the EO. NBSP I also think it is about the recovery more than benefits. Joseph Trevisani NBSP Indeed Yohai Elam NBSP It goes hand in hand with a drop in coronavirus cases. Joseph Trevisani NBSP claims have been the canary in this pandemic. Valeria Bednarek Drop in NBSP cases have been put on doubt by a study published yesterday. Coronavirus cases are down 19% last week from the previous 2 weeks' averages. Yet in the same period, testing was down by 12%. Yohai Elam eyed the positive test rate rise. Joseph Trevisani NBSP PMI new orders and services were at their highest level in July on record. NBSP It would be odd if that much new or returning business did not prompt hiring. Valeria Bednarek Same study shows that in Texas, new cases have fallen by 10% over the last 2 weeks, but testing is down by 53% over the same time. Yohai Elam in Texas, the governor said he is not easing restrictions despite the improvement. I guess he is aware of fewer tests. NBSP PMIs have shown leaps in new orders but depressed employment components. Valeria Bednarek The percent of positive tests in Texas has doubled over the last 2 weeks to about 24%, according to the same report. Anyway, guess exhaustion about the ongoing situation also adds to the whole picture. We are lucky to be working, but how long would you stay home doing nothing for health's sake? Joseph Trevisani NBSP I believe fatalities are falling too, except in Florida. Yohai Elam deaths dropped, but flattened again above 1,000 per day. Joseph Trevisani NBSP True, I agree with the exhaustion. NBSP If claims continue to go down we might expect a strong August NFP. Valeria Bednarek Yet, and guess the market will start pricing that in next week, with another batch of positive figures, and the official release will be once again a non-event. Joseph Trevisani NBSP One problem is the difference between reported and actual. NBSP Does that chart list the date of death or the report? NBSP They are not necessarily the same thing and can skew the result. Yohai Elam Next week's initial claims are for the current week, ending August 14, which is NFP survey week. Valeria Bednarek Yups, exactly Yohai Elam There are indeed issues with the data. It is clear the trend is to the downside, but the situation is still far from being under control. NBSP Dr. Deborah Birx said it is more widespread than thought. NBSP Getting into rural communities. Joseph Trevisani NBSP No doubt it is. Every serological study shows that, and for some studies, the factor is 3 and 4 times. Valeria Bednarek agreed, more widespread. Deaths seem stable and slowly decreasing as new contagions are younger people, which has a higher rate of survival. Joseph Trevisani NBSP Perhaps the economy has turned an important corner here. Yohai Elam Maybe in New York, but not in hard-hit states. Joseph Trevisani NBSP. Well, as for NYC, I'll let you know when we return in 3 weeks. Yohai Elam. A tweet by Jed Kalko, chief economist at Indeed. Joseph Trevisani. I am not so sure about this tall. NBSP CPI was much stronger in July than expected. NBSP. You need demand for that to be true. Yohai Elam. For me, it's still the bounce from the deep lows, but losing steam. NBSP. The swoosh in the Nike logo is flattening. Valeria Bednarik. Yes, Joseph Trevisani. Indeed, NBSP. The job NBSP market may not represent the national market. NBSP. Remember the last ADP report. Yohai Elam. ADP is undoubtedly off the rocker, but the trend of a slowdown in job restoration was seen in July. SNFP. Joseph Trevisani NBSP. Yes, I would think they have done their report serious damage with the misses and then the revisions. Yohai Elam. ADP hired a top-notch economist a few years ago and he improved their figures, NBSP, but have proved susceptible to the virus. NBSP. Eric Rosengren of the Boston Fed said that temporary job losses may turn permanent. Valeria Bednarik. I already mentioned this, but the world is losing roughly 500 million jobs within this pandemic. Joseph Trevisani NBSP. I am sure many already have. NBSP. Small businesses have failed. NBSP. In urban areas with no foot traffic like NYC, how can they survive? Yohai Elam. $500 million. NBSP. Hard to grasp. Joseph Trevisani NBSP. There is also an opportunity in this as well, though it may take some time for it to show. Valeria Bednarik. Of course, every crisis is an opportunity, but not for all. Joseph Trevisani NBSP. This week's improvement in claims was 20%, a nice round number, well 19.1%. Valeria Bednarik. Still, the US needs to recover what some 50% of the jobs lost in March and April. Right? Yohai Elam. 58%. 42% were restored. Joseph Trevisani NBSP. Yes, 42% back so far. NBSP. Tomorrow's retail sales are forecasted to drop sharply. I have my doubts. Yohai Elam. Around 70% of the US economy is centered on consumption if I'm not mistaken. Valeria Bednarik. Woha, quite a number. Joseph Trevisani NBSP. Yes, that is the usual figure. Yohai Elam. That should be a big market mover, but so many other figures have failed to move currencies. And then came this yield roller coaster out of nowhere. Joseph Trevisani NBSP. In May and June, overall retail sales doubled forecasts. NBSP. 25.7% vs 13%. Yohai Elam. Small increases are expected for July's retail sales. Joseph Trevisani NBSP. Quite a rise in the 10-year. Valeria Bednarik. Could have doubled forecast but are still below pre-pandemic levels. That's the mark that should turn non-events into events. Joseph Trevisani NBSP. Yes, but I think there is cause for optimism on the sales in July. NBSP. No, here, I disagree. NBSP. Pre-pandemic comparisons are for economists, not markets. Yohai Elam. Why? Joseph Trevisani NBSP. I think markets care where we are going and how fast, not in where we were in January. NBSP. Markets price the future, not the past. Valeria Bednarik. But today, markets care about when economies are going to return to normal, when there will a chance of actual growth. NBSP. And such a chance won't come when we are just recovering March-April slumps. Yohai Elam. Markets are also moving on where investors see the value and where they don't. Bond yields are poor, real estate uncertain, and all the money sloshing around goes to markets. NBSP. There is no alternative. Valeria Bednarik. Real estate is a mid-term opportunity. Yohai Elam. Vaccine hopes may be real, albeit not the Russian version. Joseph Trevisani NBSP. There is the bond market. 10-year rates are up sharply this month. NBSP. There is a great deal of profit in these bond levels. NBSP. It might not take much for a serious bond sell-off. Valeria Bednarik. Yet, vaccine hopes are real. About bonds, the 10-year note yield is at around 0.66%, it was above 2.0% in February. Even if we have a sell-off, we are still heading into pre-pandemic normal. Yohai Elam. It was above 3% not that long ago, seems far now. Valeria Bednarik. Also, just come to my mind that we get used to things too quickly. The market cheered the lastest yields bounce, which anyway, stand at record lows. Yohai Elam. Higher yields allow the Fed to enact yield curve control. NBSP more bond buying, better for stocks, NBSP one of many lines of thought. If yields continue higher, will the dollar follow once again, or was this week's action just a summer blip? Joseph Trevisani, NBSP. I think the Fed would be gals to revert to a more normal policy if possible. NBSP Y2C, as I like to call it a drastic policy. It assumes the Fed knows better than the markets. NBSP a dubious proposition only to be used in dire circumstances. Glad to revert. Yoha Elam. The Fed's inflation forecasts in the past decade have shown it doesn't know everything. Joseph Trevisani, NBSP. You are being kind. Valeria Bednarik. Ha. Joseph Trevisani, NBSP. My view is that the Fed knew well that their forecasts were optimistic, NBSP, but since price stability is one of their mandates and they have defined it as 2%, they had no choice. At no time in the decade after the financial was inflation one of their top, but they are obliged to pay its rhetorical homage. Yoha Elam. They raised rates to stay ahead of the inflation curve, and now they want to see the white in inflation's eyes before considering raising rates. Powell makes Yellen look like a fierce hawk. Joseph Trevisani, NBSP. It's just that the Fed has far greater issues than whether inflation is at 2%. As long as prices are not threatening to deflate. And besides, what the Fed would do to counter low inflation, it is already doing. Yoha Elam. So, if jobs are picking up and inflation remains low, what's next for the dollar? Joseph Trevisani, NBSP. Claims point the way, but we will need more substantial data for the dollar to recover: retail sales, NFP, and consumer confidence. In the meantime, watch Treasury yields. Valeria Bednarik. Guess I have to agree with that. No time for a bullish dollar. Joseph Trevisani, NBSP. Not yet at any rate. NBSP. Historically the US recovers faster. We shall see if that remains true. Valeria Bednarik. Yups, wait and see now. Yoha Elam. Yep, agreed. NBSP. So many unknowns at this point: the trend of the virus, fiscal support, relevant not only for the US. Valeria Bednarik. Uncertainty keeps us busy. Can you imagine how boring it would be if we had all the answers? NBSP. Joseph Trevisani, NBSP. Utopia is always boring. Yoha Elam. Last year we had lots of uncertainties without volatility. NBSP. This year, even your USD is moving. Valeria Bednarik. Point there, no doubts. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP USD price analysis climbs further beyond 1.3100 mark, back closer to weekly top. ntvforex.com news ID FB5 CFA 4 minutes ago by Haresh Menghani. GBP USD gained strong traction on Thursday and climbed further beyond the 1.3100 mark. The technical setup now favors bullish traders and supports prospects for additional gains. DIPs back below the 1.3100 mark might be seen as a buying opportunity and remain limited. The GBP USD pair continued scaling higher through the early North American session and jumped to fresh daily tops, around the 1.3125 region in the last hour. The momentum pushed the pair beyond a one-week-old descending trend line resistance, which might now be seen as a key trigger for intraday bullish traders. The breakout comes on the back of the overnight bounce from horizontal support near the key 1.3000 psychological mark and supports prospects for additional gains. NBSP. Meanwhile, oscillators on the daily chart maintained their bullish bias and have just started gaining traction on the 4-hourly chart, reinforcing the constructive setup. Hence, a move towards August daily closing highs, around the 1.3140 region, en route the recent swing highs near the 1.3185 area, now looks a distinct possibility. NBSP. Some follow-through buying beyond the 1.3200 mark will set the stage for a move towards reclaiming the 1.3300 round figure mark for the first time since March. On the flip side, any meaningful pullback below the 1.3100 mark might still be seen as a buying opportunity and remain limited near the 1.308075 support zone. That said, failure to defend the mentioned support might turn the pair vulnerable to slide back towards weekly lows, or a strong base near the 1.3000 mark. GBP for US dollars hourly chart technical levels to watch. GBP USD overview today last price 1.3116 today daily change 0.0082 today daily change percent 0.63 today daily open 1.3034 NBSP trends daily SMA 201.2919 daily SMA 501.2687 daily SMA 1001.2529 daily SMA 2001.271 NBSP levels previous daily high 1.3068 previous daily low 1.3006 previous weekly high 1.3186 previous weekly low 1.2982 previous monthly high 1.317 previous monthly low 1.236 daily Fibonacci 38.2% 1.3029 daily Fibonacci 61.8% 1.3044 daily Pivot point S1 1.3004 daily pivot point S2 1.2973 daily pivot point S3 1.2941 daily pivot point R1 1.3066 daily pivot point R2 1.3098 daily pivot point R3 1.3128 NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold plunges more than $100 in one day. How do you like it? Analysis http ntvforex.com News ID FBB8BF813 2022 29:00 p.m. Gold prices plunged on Tuesday. Does it mean the end of the bull market? Tuesday was hot. NBSP and I don't mean the weather. I mean that it was a remarkable day for the precious metals. The price of gold plunged more than $100 2 days ago, and it even dove below the key $1,900 level at one point on Wednesday. As the chart below shows, the London gold fix dropped from $2,044.50 to $1,939.65, or more than 5%, the worst fall in one session during the past several years. The price of silver plunged even more, from $29 to $24.40, which is more than 15%. Are you disappointed? Why should you be? Are you disappointed when the sun goes down after sunrise? Are you disappointed when there is a cold and rainy day during the summer? You see, one day neither confirms nor falsifies the longer-term bull or bear market. The bull market does mean that gold has to rise constantly, day after day, in a straight line. There are always corrections on the way. Nothing goes straight up forever. Ups and down, as in our daily lives. Actually, you have been warned about the correction in the gold market in the last edition of the Fundamental Gold Report, and both in the Gold AMP Silver Trading Alerts and Stock Trading Alerts as well. I wrote that a correction in the short run would be totally normal, or even desirable, and that until July, the rally in gold has been very gradual and steady. So, after the recent amazing acceleration, correction would not be something strange, and voila, it happened. So I hope that you were not surprised. The pace of the recent rally was simply too fast to be not followed by the correction. Gold was like Icarus, it flew too close to sun, and it had to fall. NBSP WADA S next for gold. Some people believe that the recent plunge means the end of the bull market and that gold should go lower now. One of the major arguments behind this opinion is the improving epidemiological situation in America. Indeed, as the chart below shows, the U.S. daily infection rate is dropping slightly, which creates also better economic prospects. Well, the improving epidemiological situation and followed better economic prospects are definitely the headwinds for gold. It might be the case that most of the worst news related to the coronavirus pandemic is already priced in, and that the American economy will now only strengthen. However, the yellow metal is not strictly linked to the number of new cases of COVID-19. Actually, its recent rally occurred at the turn of July and August, when the epidemiological situation already started improving. And gold did not enter the bear market when the US seemed to strengthen after the first wave of infections. NBSP. There are also other risks present. The dollar may rebound, while the real interest rates can go up. But these risks are always with us and we monitor them closely. However, the truth is that from the long-term point of view nothing changed this week in the fundamental outlook for gold. The Fed will remain dovish for an extended period of time, which means that the interest rates will remain at ultra-low levels for years. As Powell has admitted recently, hikes are not likely to happen for a very long time. So, we still have lax monetary policy, unsound fiscal policy with rising fiscal deficits and public debts, geopolitical concerns, and risk that all the injected stimulus will translate one day into inflation and that the central banks will allow it to rise above the target. In other words, the marketplace became simply overcrowded and the correction could, thus, occur without any fundamental shifts. If true, when the correction and consolidation is over, gold could continue its march north, maybe in a calmer way, especially if the greenback remains soft. But, of course, investors should be as always cautious, and they should read our gold amp silver trading alerts for more technical analyses. The upcoming days will be critical for the gold market. NBSP want free follow-ups to the above article and details not available to 99% investors. Sign up to our free newsletter today. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Mexico lack of fiscal stimulus limiting recovery. Wells Fargo. ntvforex.com news ID F708C3 5 minutes ago by Mata as Salord. Analysts at Wells Fargo point out Mexico is still struggling with COVID spread. They see few signs of a meaningful fiscal stimulus on the way and consider the Mexican economy may not see as much of a rebound in economic growth during the second half of the year. NBSP key quotes NBSP. Unfortunately, not all economies are on the upswing. Mexico's economy remains in a difficult place as the country grapples with its still robust spread of COVID-19. Industrial production in Mexico was down 16.7% year-over-year in June, compared to 10.8% in the United States. And in July, the manufacturing PMI for Mexico registered a 40.4 reading, up just a bit from 38.6 in June and still firmly in contractionary territory. We have long maintained that countries with the fiscal capacity, capital markets access and political will to float their economies through the COVID-19 would have a major leg up, and Mexico's experience thus far is a prime example of how a country without these ingredients may struggle mightily when dealing with the economic fallout from COVID-19. Our latest forecast has downgraded real GDP growth for Mexico for both 2020 and 2021. If realized, Mexican real GDP would contract in 3 consecutive years from 2019-2021. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US stimulus deadlock pairs gains for European markets analysis http ntvforex.com news ID BC3CB5813 2022 38:33 p.m. European stocks have given up some of their gains of the last few days, after US House Speaker Nancy Pelosi pushed back on the prospect of a stimulus agreement plan in the near future. With the S&P 500 close to record highs, it would appear that U.S. politicians are tone deaf to the very real risks to the economy of their procrastination, at a time when their stock portfolios are looking quite healthy, and the U.S. jobs market continues to show signs of improving. It has now been nearly 2 weeks since the $600 a week unemployment enhancement benefit ended, and thus far we haven't seen a significantly negative effect in the weekly jobless claims numbers, though this could change quickly in the coming weeks. most of today's weakness has been reflected in the oil and gas sector after the IEA downgraded its outlook for oil demand due to concerns about the outlook for air travel, with Royal Dutch Shell and BP under pressure after 3 days of decent gains. ITV shares are one of the worst performers on the FTSE 100 after it was announced it was losing its place in the MSCI Global Index as part of a quarterly review. Travel operator TUI's latest numbers have seen the shares drop sharply today, after they threw into sharp focus the stark reality of the challenges facing the travel industry. Coming on the back of yesterday's stabilization package with the German government, which was increased by another A1.2 bn, we saw that Q3 revenues declined an eye-watering 98.5% to A75m as the company swung to a 1.46 bn pre-tax loss. Summer bookings were down 81% with the company saying it expected to achieve break-even in Q4, which still seems a tall order, at a time when there are concerns about a second wave. As part of the bailout deal to shore up its finances, the company has had to get rid of 8,000 jobs, as well as half of its aircraft fleet. On the plus side, summer bookings for 2021 are up 145%. It was a slightly more positive story for GVC Holdings, the company which owns Ladbrokes and Corals. Their latest numbers pointed to a sharp shift to online, as the company posted an 11% decline in net gaming revenue in the first half of the year. This knocked gross profits down by 13% to just over A1 bn. Despite a sharp decline of 50% in UK retail like-for-like revenue, mainly due to the closure of its retail stores, online NGR rose 21%, with gaming rising by 31%. This helped boost earnings by 53% to A368.6m, which in turn helped to offset the much bigger hit to UK and European retail revenues. As a result, profits after tax came in flat year-on-year at A2.1m, with management expressing optimism for the rest of the year, now that sporting calendar has resumed. Assuming no further disruptions, management estimate that underlying earnings for the rest of the year is likely to be between A720m and A740m. Precision engineer and manufacturing company Renishaw has also seen its business hit by the challenges of COVID-19, its share price plunging sharply after annual revenues declined 11% to A510.2m, prompting the company to pull its dividend, after profits fell to A3.2m, down sharply from A109.9m the year before. The company was hit by a combination of trade tensions between the US and China, while its healthcare business was affected delays in orders, installations, and postponements of elective surgery, due to the various lockdowns. Transport provider National Express has also seen its shares drop sharply after its latest half-year results saw mileage and passenger travel fall by 80% during its first half, despite a good start to the year. As a result of the slump in travel, the business boosted liquidity by A800m, including A600m from the coronavirus corporate finance facility. The company has also put over 40,000 employees on furlough, temporarily laid off. Overall group revenue fell 23% to just over A1 bn, as the company posted a group statutory loss before tax of over A122m, with little prospect of a rebound in the short term. NBSP US markets opened slightly lower, even as the Nasdaq continues its push higher, after the latest weekly jobless claims came in at 963k, dropping below the 1m level for the first time since before the lockdown in early March. Continuing claims also fell back to 15.48m, again the lowest figure since the first week in April. At the end of July there was much hand-wringing at the prospect of the loss of the weekly $600 unemployment enhancement, and the effect it might have on the U.S. jobs market. Yet here we are, 2 weeks into August, and the weekly claims numbers have continued to fall, as have the continuing claims numbers. With U.S. stock markets at record highs and the jobless claims numbers still on a downward track, U.S. politicians have little incentive to arrive at any sort of new stimulus deal, and so the procrastination is likely to go on, until one or other of these two factors goes into reverse. Apple shares are in focus after the company laid out a new subscription plan called Apple One, which appears to be designed to take on Amazon's Prime subscription bundle. These look set to be launched in October just in time for the pre-Thanksgiving and Christmas period, and look set to be aimed at trying to encourage subscription to multiple Apple services, including Apple Music and Apple TV. Cisco Systems shares have also come under pressure after the company downgraded its expectations for its Q1 forecast, saying that they expected a fall of between 9% and 11% from last year. The latest numbers from online car dealer Vroom has seen the shares slide into a ditch today, after the newly IPO'd business posted a bigger than expected Q2 loss of $63.2 million. Q3 guidance was also disappointing, with the company estimating an even bigger loss than the one we saw in the last quarter. Ride-sharing app Lyft shares have also come under pressure after reporting a 61% drop in revenue in Q2, though this was slightly better than expected. In terms of the restarting of the business, the outlook was more positive, with rides 78% higher in July than in April. NBSP FX, the US dollar appears to be under pressure again after the gains of recent days as doubts continue to grow about a US stimulus plan, after yesterday's comments from Nancy Pelosi. The pound is also outperforming on optimism over a possible EU-UK trade deal as talks get set for a restart next week on the August 19th. With reports that the Irish PM expressed optimism that there is a landing zone coming into view for a post-Brexit trade deal. The worst performer is the New Zealand dollar after the government there reimposed lockdown restrictions in Auckland, after an outbreak of coronavirus cases. NBSP commodities oil prices are under a little pressure after the IEA downgraded its outlook for oil demand due to concerns about the outlook for air travel. The IEA became the latest in a number of bodies to do this in the last day or so, following in the footsteps of OPEC as well as EIA. The decline in air travel is likely to be longer lasting than originally predicted due to the risk of isolated outbreaks acting as a brake on mobility. Gold and silver prices appear to have stabilized for the time being, with the weaker US dollar also helping. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD CAD rebounds modestly after dropping below 1.3200 for first time since February at ntvforex.com. News IDC 1B61 4 minutes ago by Aaron Sengezer. USD CAD continues to trade deep in the negative territory. Falling crude oil prices help USD CAD recover modestly. US dollar index inches lower toward 93.00 in American session. The USD CAD pair extended its daily slide during the American trading hours and touched its lowest level since February at 1.3190. However, the pair recovered modestly following that drop and was last seen trading at 1.3220, where it was still down 0.17% on a daily basis. USD sell-off continues. The broad-based selling pressure surrounding the greenback caused the bearish momentum of USD CAD to pick up in the second half of the day. The data published by the U.S. Department of Labor showed that initial jobless claims came in below 1 million for the first time since March and helped the market sentiment remain upbeat. NBSP, despite a lack of progress in the U.S. coronavirus aid bill talks, the risk-positive environment weighed on the USD and forced the US dollar index DXY to push lower toward 93.00. As of writing, the DXY was down 0.35% on the day at 93.09. On the other hand, crude oil prices turned south in the last hour and made it difficult for the commodity-sensitive loonie to continue to gather strength against the buck. At the moment, the barrel of West Texas Intermediate is down 0.2% on the day at $42.45. In the early trading hours of the Asian session on Friday, industrial production and retail sales data from China will be looked upon for fresh impetus. Better than expected figures could provide a boost to oil prices and allow the CAD to outperform its rivals. NBSP technical levels to watch for USD CAD overview today. Last price 1.3214 today. Daily change 0.0032 today. Daily change percent 0.24 today. Daily open 1.3246. NBSP trends daily SMA 20 1.3393 daily SMA 50 1.3493 daily SMA 100 1.374 daily SMA 200 1.3532 NBSP levels. Previous daily high 1.3347, previous daily low 1.3229, previous weekly high 1.3451, previous weekly low 1.3234, previous monthly high 1.3646, previous monthly low 1.3331, daily Fibonacci 38.2%, 1.3274 daily Fibonacci 61.8%, 1.3302 daily pivot point S1 1.3201 daily pivot point S2 1.3156 daily pivot point S3 1.3083 daily pivot point R1 1.3319 daily pivot point R2 1.3392 daily pivot point R3 1.3437 NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD jumped after job data analysis. http ntvforex.com news ID 99EE1B 8/13/2022 38:50 PM. AUD approaches the strong resistance at 0.7185. What may happen next? Fundamental overview today. Australia reported that 114,700 its citizens found jobs in July. That numbers beat all estimates, as analysts anticipated only 30,000. Analysts may set such a low forecast because Australia was suffering from the fresh virus resurgence, especially its state Victoria. Australian unemployment rate exceeded expectations to 7.5% vs predicted 7.8%. As a result, the Australian dollar surged. Moreover, vaccine hopes and decreasing new virus cases improved the market sentiment and underpinned the risky Aussie. Do you know that Australia is the second largest producer of gold after China? Last year Australia produced the record amount of yellow metal. Therefore, if the USD gets weaker and the gold price rises further, the AUD may become the best performer on the Forex market. Technical tips. On the 4-hour chart we can see that AUD-USD bounced off the support line at 0.7115. It has broken out through the resistance at 0.7145 and 2 moving averages. The move above the high of August 11th at 0.7185 will drive the price to the high of August 7th at 0.7215. On the flip side, if it breaks down 0.7145, it may fall further to the support line at 0.7115. Follow the speech of the Governor of the Reserve Bank of Australia at 2:30 MT time on Friday. If the RBA's tone is hawkish, the AUD will rise. Otherwise, if the RBA's tone is dovish, the AUD will fall. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Bonds are 6 points higher at 178A31 analysis. http ntvforex.com news ID 2ad7bf 8/13/2023 069 PM. Financials as of this writing 6:00 AM. The September bonds are NBSP 6 points higher at 178A31, the 10-year note up 2 at 139A02 and the 5-year fractionally higher at 125A13.5. Yield for the 2-year is up 5 basis points for the week at 0.16, the 5-year up 0.9 at 0.29, the 10-year up 16 at 0.67 and the 30-year bond up 18 at 1.36. Since liquidating long positions last week, the market has seen friendly jobless claims and employment numbers. I still like the long side of the market and will re-establish long positions below 178A15 in the bonds and or the 10-year note should the bonds trade below the number. Grains December corn is 4A2 higher at 331A4, November beans up 7A4 at 890A4 and December wheat 0A4 lower at 499A0. Yesterday AS report was friendly, particularly ending stock corn at A.75 16 billion NBSP bushels versus a pre-report EST of 2.8 BB. I remain long December corn and will raise protective sell stops to 322A4. Cattle October LC closed 109.57, up 0.725 and up 2.10 for the week. September FC closed at 14795A, up 1.325 and up 1.50 for the week amid good demand for choice cuts of beef. An increase in corn prices after yesterday's AS grain report should have a negative effect on FC prices. I remain short feeder cattle. Silver NBSP September silver is 30 cents higher at 26.48, down from 27.84 a week ago. Since last week the market has seen a range of 24.85 to a new recent high of 29.70. I remain on the sidelines. S&P this market is 4.00 lower at 3,366.00. Yesterday the market made an attempt at new contract highs, making a high at 3,387.00, coming close to the March high of the 3,393 area. Treat as a trading affair. I prefer the short Siberia on rallies. Support 3,344.00, resistance 3,382.00. Currencies. Last week we liquidated all short biased US dollar related positions and are currently on the sidelines awaiting a rally in the dollar index above the 94.50 level. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. $2,100 gold and $30 silver. Now what analysis? http ntvforex.com. News ID 21F94B 8/13/2023 10:16 p.m. on August 7. NBSP gold in US dollars notched its all-time nominal high of $2,089. It's been printing new highs in many other currencies for quite a while now. Silver peaked NBSP so far at $29.92. After a few days of attempting to scale $30, it gave up the ghost and dropped a stunning $4.90 intraday, closing down $3.20. Not satisfied with punishing the bulls during the day session, silver proceeded to drop another $2.30 in overnight Forex trading, but next day opened virtually unchanged, just below $26 thus far. It's certainly lived up to its reputation popularized by NBSP David Morgan, NBSP, who has famously said that silver will either wear you out or scare you out. Those who were late to the game within the last few weeks found their positions either underwater or at best, break even. Even more so, pity the leveraged metals ETF speculators who bet with options or futures. When the margin clerk contacts you, it's time to instantly pay up or be closed out by your broker. No excuses. This is where those who principally hold physical gold, silver, and platinum in hand, preferably not in a bank box, or in a secure storage facility like Money Metals offers, and who take the longer view, get to sleep easily at night. Some investors have made several large buys over a few years. Many have dollar cost averaged by the month or quarter, and still others had the courage to buy into declines when weak hands were selling out or afraid to buy. My guess would be that most who read this column are in one of these accumulator subcategories. They decided how much they wanted to acquire, earmarked the funds, and activated their plan without paying a lot of attention to what the herd might be doing. They are investing professionally. And if we're right about the size and duration of the current bull run, which saw record high gold prices and a virtual doubling of silver in just the last few months, these fortunate stackers are going to be quite happy in the coming months and years with the result of their efforts. Don't be too concerned about large nominal price swings. In fact, I can tell you with a fair degree of certainty, that you ain't seen nothing yet, whether in terms of the coming intraday overnight price volatility, or in regard to the ultimate high these increasingly precious and scarce metals are ultimately going to reach. You've no doubt heard analysts speak of 3-digit silver and $8,000, $15,000 gold. For my money, this kind of talk may not be all that far-fetched. It would not take a societal collapse, civil war, or regional conflict among nations to bring it about either. The massive debt incurred by our federal, state, and local level leaders, not to mention most other countries' governments around the world, added to declining new metals discoveries, shrinking ore grades and lengthy mine development lead times post-discovery, have the potential to bring these lofty prices into view all by themselves. But the biggest reason you should want to have a solid position in physical metal, is that it serves as an insurance offset against a value decline in other assets you hold, and against the devaluation stated as public policy by our government which guarantees to make every dollar in your pocket worth 10% less each year, as far as the eye can see. You're holding real money simply by receiving it in exchange for some of your paper promises. Where NBSP could metals turn around toward new highs? NBSP if the price declines lately are just corrective in nature, where might their drop? Find chart support 2 charts below, utilizing highly predictive Fibonacci retracement percentages, courtesy, Peter Degrove, can offer us some clues. Prices could certainly plumb even lower without disrupting the bullish case, but these figures do offer a magnetic frame of reference, to which millions of traders around the world pay attention daily. When NBSP might the next leg up get underway? Technical analyst, Gary Savage, who has a good record of ironing out such things, has stated in the public space that an intermediate weeks to months term correction is underway. He feels that the final washout as low as $1,700 could be another 6 to 8 weeks out. But then there's this NBSP during the evening of August 12. Both gold $76 and silver $2.30 declined sharply, stopped near initial downside targets, then turned around in just one session. What this could mean is that, just like how Mr. Market fooled most people who thought that silver would struggle for the rest of the year to get through multiple resistance areas between $20 and $26, let alone almost touch $30. Then look what happened in less than a month, and even more amazing, how about gold cutting through its all-time US dollar high at $1,923 and notching several closes above $2,000 soon thereafter? What this tells me is that trying to predict when or where a given price point is going to be reached with these restless metals is about as risky as not buying any in the first place. Yes, normally, we could expect a 2-month consolidation washout of weak hands, before new tries to take out $30. But were the last 6 weeks normal in a vibrant bull run like this, virtually anything is possible, and it behooves both you and me to keep that sort of thing foremost in mind. For sure, if you're one of those people who either have not purchased as much as you want higher premiums notwithstanding or still have not even begun to accumulate, then, pray tell, why not the late Jesse Livermore, one of the most famous speculators who ever lived, once said, "It was never my thinking that made me the big money, it was being right and sitting tight." Got that? Yes, maybe you'll have another 6 weeks to get your metals shopping done before we see gold above $2,000 again and silver above $30. But then again, maybe not. Either way, the big swings we're seeing may be offering one of the last and best opportunities you're going to presented with for quite some time to come. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. WTI breaks below daily consolidation channel, drops toward $42. http ntvforex.com. News ID 07B9982. 2 minutes ago by Aaron Sengezer. WTI came under renewed bearish pressure in American session. IEA expects a decline of 8.1 million BPD in global oil demand in 2020. Focus shifts to key macroeconomic data releases from China. Crude oil prices came under renewed selling pressure during the American trading hours, and the barrel of West Texas Intermediate WTI dropped to a daily low of $42.10. As of writing, the WTI was down 0.7% on a daily basis at $42.23. Earlier in the day, NBSP, the International Energy Agency (IEA), in its monthly report announced that it revised down the 2021 crude oil demand estimate by 240,000 barrels per day to 97.1 million barrels per day. The IEA further noted that it sees the global oil demand declining NBSP by 8.1 million barrels per day in 2020 due to poor jet fuel demand. The upsurge in COVID-19 cases has prompted a downgrade of the H2 demand estimate for gasoline, the IEA explained. Focus shifts to key data from China. Meanwhile, Israel and the United Arab Emirates announced that they have reached a deal to normalize relations between those two countries. As part of the agreement, Israel has agreed to suspend applying sovereignty to areas of the West Bank that it had been discussing annexing, a White House official told reporters. Following this development, easing geopolitical tensions in the Middle East seem to be putting additional weight on crude oil prices. On Friday, industrial production and retail sales data from China will be looked upon for fresh impetus. If these figures show that the economic recovery in the world's second oil consumer is picking up pace, the WTI could gain traction and target $43 ahead of the weekend. Later in the day, Baker Hughes Energy Services will release its weekly U.S. oil rig count data. Technical levels to watch for WTI overview today: last price 42.51, today daily change 0.29, today daily change percent 0.68, today daily open 42.8, NBSP trends daily SMA 2041.47, daily SMA 5040.15, daily SMA 10033.35, daily SMA 20043.11, NBSP levels: previous daily high 43.13, previous daily low 41.76, previous weekly high 43.62, previous weekly low 39.75, previous monthly high 42.52, previous monthly low 38.73, daily Fibonacci 38.2%, 42.6, daily Fibonacci 61.8%, 42.28, daily pivot point S1 41.99, daily pivot point S2 41.19, daily pivot point S3 40.62, daily pivot point R1 43.36, daily pivot point R2 43.93, daily pivot point R3 44.73, NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis: XAU/USD hits fresh daily highs but fails to break $19.50. http ntvforex.com. News ID 9E9EC9. 3 minutes ago by Mata as Solord Gold turns positive for the day after spending most of the day in a consolidation range. US dollar moves of lows, helping the resistance area at $1,950. Gold prices broke a tight range and climbed to $1,950.65 ounce, reaching the highest level in 2 days. The yellow metal so far failed to make a run above $1,950 as the area continues to limit the upside. A weaker US dollar across the board is supporting the move higher. The US dollar index is falling 0.35%, off lows. Earlier the DXY bottomed at 92.94 but it was rejected from below 93.00. The greenback has not been able to benefit from US economic data, neither from higher US yields. Initial jobless claims dropped below 1 million for the first time in 21 weeks, showing numbers below market consensus. Also, continuing claims fell more than expected. A positive sign for claims that resumed the downtrend after weeks of consolidation. Regarding yields, the US 10-year reached at 0.69%, the highest level in a month. The rebound from lows capped the upside in gold that continues to trade near but below the $1,950 area. A break higher should clear the way to more gains. On the flip side, immediate support is seen at $1,935 followed by the lower limit of 2-day's range at $1,920 and then the $1,905 area. XAU/USD overview today last price 1943.8 today daily change 27.72 today daily change percent 1.45 today daily open 1916.08 NBSP trends daily SMA 20 1936.02 daily SMA 50 1829.7 daily SMA 100 1762.07 daily SMA 200 1649.62 NBSP levels previous daily high 1949.4 previous daily low 1863.24 previous weekly high 2075.32 previous weekly low 1960.67 previous monthly high 1984.8 previous monthly low 1757.7 daily Fibonacci 38.2% 1916.49 daily Fibonacci 61.8% 1896.15 daily pivot point S1 1869.75 daily pivot point S2 1823.41 daily pivot point S3 1783.59 daily pivot point R1 1955.91 daily pivot point R2 1995.73 daily pivot point R3 2042.07 NBSP Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me mt5.expert.advisors.